Take it away.
Okay.
But no-
Hello, everyone. Thank you so much for being on the call today. I'm excited to talk with you guys about condos. I've been getting a lot of calls about condos, and to me, there's a lot of information out there that I think that we need to go over so that you guys can be better educated, more informed when you're out there in the market and in your communities, whether you're wanting to list a condo or you've got a buyer that is looking for a condo specifically, whether it's, a financial reason or others. There's information out there that I think will help guide you guys to be more successful and more productive this year. So we're going to talk all about condos today. Now, I'm not going to get into every little detail about condos. If you've got a question, please put it in the chat at the end of the call today. I'll go through Q&A with you guys. I'll stay on as long as you want. Otherwise, if you think about something after the call and you can't find the answer on your own, send me an email, shoot me a text, however you want, and I'll help guide you through to get to the resolution you need. Okay, my contact information is on here. I'm looking at the list of who all is on this call. I recognize most of you, but there are a few names that I haven't seen before. So my name is Jodie Hatano. I'm with Rocket Mortgage. I've been in the mortgage business for 18 years. I've been in real estate for 20. So I've kind of lived through the ups and downs of what we've seen in the last 20-ish years in the market. It's been a tough market these last almost 2 years now. No joke about that. We all know that. Staying positive is really hard to do at times, but if you ever feel like you're kind of down in the dumps or you don't see a way out, give me a call and let's talk about how to get you out of that and give you some tools and guidance on how to get out into your communities and talk about the market, what's going on, what we anticipate, so that I can help you better serve your community. My phone number is listed there. My email address, it's going to be put in the chat box as well. I've always told you guys, call me anytime you need, evenings, weekends, encouraged. It's when I do most of my work because that's when our clients are home, right? And home from work, and they can, kind of tackle the tasks that we have for them, whether it's a loan in process or they want to look at properties. So don't ever hesitate to call me. Send me a quick text if you've got somebody on the phone or you're in person with someone and they want to talk right away. Say, hey, Jodie, I need you right now. Are you available? And I will do my best to answer that call for you. Okay, before we talk about condos, I want to go over a couple of things with you guys that I got today. We do have a pricing special. If you've turned the news on at all, I'm sure you've seen in the market that core inflation has gone up. So we're going in the opposite direction of where we have been headed this year. Unfortunately, the market the last 2 days has been really rough, especially when it comes to mortgage-backed security prices. And we have seen a significant increase in interest rates. So when that happens, what do we do here at Rocket? We say, well, that is the facts. And yes, all lenders everywhere have increased their interest rates, but what can we do to still help people in our communities bridge the gap of home ownership affordability? So we've introduced, and it's a very short term because we don't know what's going to happen in these next few days. So that's why it's going to be just a few days of this pricing special. It could be extended next week. Don't know that yet. It's going to depend on how the market reacts. But between now and midnight Sunday, I am able to take up to 0.5 point in cost off of an interest rate for a loan amount up to $400,000. If it's over $400,000, I can take up to 1 point in cost for that interest rate off without having to ask for a pricing exception, which is what we normally call that when we're going to charge a borrower less fees than what the market is demanding. We call it a pricing exception, and we are allowed to take those from time to time if we're in a competitive situation. We have to also make sure we're fair lending to everybody. But we have introduced this starting right now until midnight Sunday. This is for purchase and refinance. So if you've got somebody that's negotiating a contract and you haven't had them talk with me yet, maybe they've got a lender where they're like, hey, I'm not leaving this lender. I'm staying with them, whatever. Grab that pricing, find out what they're getting, run it by me. If I can beat it, then it's potential that, you're going to add more value to your client by bringing them over to me. You say, okay, yes, I see you have this, but I know that Jodie at Rocket can offer you this, and this is the savings, and I'll give you all of that information. And if you've got somebody that's brand new that's shopping right now, that's going out maybe the next day or so to look at properties or this weekend, let me know. Let's see what I can do to help them. In addition to that, I am offering a no lender fee loan for, well, it's not a no lender fee loan, but I'm basically able to waive the lender fee for any contracts that come in. I'm not, that is not until Sunday. That's going to go until, we see kind of what the result is. And if we're getting some traction here. Now, this is to help me, but it's also to help you. Ultimately, the benefit is to your borrower because it's saving them an additional part of closing costs, which is $12.75. That is normally Rocket's lender fee, covers processing and underwriting. If loans don't close, then we do still have to pay our underwriters and processors to work on those on loans. And if they don't close, then we have to fund that somehow. So the lender fee that we normally have, $12.75, is going to be waived. So I do not have to charge that. If you've got a borrower that is shopping under contract or whatever, here's an easy script is, as your realtor, I can help you save even more money. Let me get you in touch with Jodie over at Rocket. You don't have to tell them, oh, she's no lender fee. You can say there are no fees. Sure, go ahead. But I always say to you guys, just get them to call me and I'll go through the rest. You just put $1,275 back in their pocket. They could use that money to buy a new appliance, for example. Maybe they're buying a house and there's no fridge. There's their fridge right there, or part of it. They can use that to offset, cost of rate buy down if they want, or title fees. It can really be applied anywhere, but for the most part, it's $12.75 lender credit. Okay, now we're going to talk about condos. Fun stuff. We're going to talk about, well, I already talked about the pricing special. We're going to talk about what a condo is. We're going to talk about FHA condo approvals. We're going to talk about Fannie Mae condo approval. Then we're going to have a summary and call to action. Now, I do want to start by saying, when I talk about FHA, you can assume that that means VA as well. FHA and VA are similar. They follow the same guidelines. I probably should have put VA in there, but just know that it is both VA and FHA. For Fannie Mae, it also includes Freddie Mac. Now, I don't know, other lenders that you guys may work with may not sell to Freddie Mac. For example, some of you have been with me since I was at Golden One. Golden One did not sell to Freddie Mac, so I did not have ability to do that. At Rocket, I do. I have VA, FHA, Fannie, Freddie, a slew of other things as well. But I'm going to also mention briefly a little bit of things about Freddie Mac, but for the most part, condo approval is going to be Fannie Mae. What is a condo? Now, I know this, I don't want you to feel like I'm dumbing it down for you, but I do have a lot of new agents that I work with. So I just kind of want to give you guys a broad overview of what a condo is. I'm not going to get too thick into it, but so if you know this already, then you're the smartest person in the class right now. If not, then, the more you know. What is a condo? A condo is a type of real estate where the homeowner owns a portion of the total complex. It can be a complex made up of multiple buildings. It can be just one building. It can even be, as you'll see down later in the call, it could be a 2-unit building and still be a condo. What do they own? They own the interior of their unit. We like to say walls in. So from the walls in, they're responsible for their unit and they own that unit outright. No other homeowner can come into their unit and do anything to it or suggest that they do anything to it. They own a portion of the building's common areas, excuse me, such as hallways, elevators, shared amenities. If you've got a complex that has a pool, tennis courts, racquetball courts, fitness center, things like that, the homeowner is going to own a portion of that, a percentage. They are responsible for the interior maintenance, like I mentioned. If the fridge goes out, the homeowner replaces that. What do they share? They typically share walls, floors, common areas, amenities. What do they have to follow? They have to follow HOA rules. They pay dues, whether that's annually or monthly. They pay, they have restrictions and regulations that they have to adhere to. For example, there's limited number of guests at the pool. So let's say I have a condo and I want my 3 nieces and my 3 nephews to come hang out with me at the pool one day. I may not be able to do that. You normally can't bring in 10 people. So you have to check to see what are the rules here. Sometimes you can, sometimes you can't. There could be a limit on pets, which is one of the reasons I don't have a condo, is because I want to have as many dogs as I can. I only have one right now, but I'd love to have 10. There are positive and negatives about buying a condo. What are the positives? Well, typically they're more affordable than single family homes. And that's important, especially in our market right now. Affordability is an issue. It's been an issue for years, especially here in the Bay Area. And I know down in Southern California, where most of you guys are located. Condos offer a little bit more affordability on the purchase price side. Now there are HOA dues, because I already know a couple of you are like, wait a minute. So there are HOA dues, but there are typically benefits to those dues. It's not just random. You don't get any benefit from it. So, for example, if you're a first-time home buyer and you're limited on funds, a condo could be a good solution for you, because you could not have a $30,000 roof replacement bill come due if you buy a house that needs a new roof. With a condo, the association is going to cover those kind of items. Now, you are paying for it, of course, in your HOA dues, but it's not a big bill that you're having to pay. So for a first-time home buyer, condo can be a really great option for affordability and also less maintenance, less stress. Maybe there's a pool in your complex, but you're not going out there testing the water all the time, making sure that it's safe to get in and things like that, or paying for maintenance. That's all covered in your HOA. If you're a first-time home buyer, maybe you're on the younger side and you want a gym, then you can let go of your gym membership, and part of that membership that you were paying before can apply to your HOA dues, and now you have a gym you can go to. I won't say 24/7, because not all condos allow that kind of access, but maybe they do, maybe they don't. But that's a really great option for some first-time home buyers. With FHA, which I'll talk about later, that is a lower credit score requirement. Rocket goes down to a 580 on FHA loans. And if your condo is FHA approved, then you could get into it with a 580 credit score with only 3.5% down. Those are some positives. What are the negatives? Negatives. So let's say the property is not FHA approved, and it's not going to be FHA approved before closing, and we can go with a conventional loan. Conventional, unless it's already Fannie Mae approved, and there's still some caveats to that, but you may have to put down up to 10% down on that condo. So that can be a negative. If your first-time home buyer only has 3.5 to 5% down, they may not be able to purchase a particular condo. For example, if it's not already FHA approved, then they'd have to come up with more money. So that's a downside. You're limited to your own space, so you can't go out into the common areas and have a big barbecue with 30 people without prior permission and things like that. You're subjected to the rules of the HOA, and sometimes they can be really restrictive, sometimes lenient. Mandatory dues. You could actually be foreclosed on if you have not paid your dues. So, that can be a downside if you're able to manage your principal and interest payment, maybe your property taxes and insurance, but you're not able to manage your HOA dues. Depending on how delinquent you are, the HOA could foreclose on your property just based on that. Noise level can be a concern in condos. So if you're you work nights, sleep during the day, could be a challenge for you. Traditional financing can't be obtained. You'd have to look at, meaning not FHA or Fannie Mae. There's a potential that you could still buy the property with a non-warrantable loan, non-warrantable condo loan. Typically, that's going to be a lot more money down, 20 to 30%, with a higher interest rate. The risk for a non-warrantable condo is very high to the lender. So therefore, they're going to recover that as much as possible in the pricing of that loan. So let's talk about FHA condo approval. Excuse me while I take a sip of water. Okay. So one of the reasons I wanted to have this call is because, like I said at the beginning, I've run into a few borrowers lately that are wanting to buy condos, or maybe they have to buy condos because it's an affordability issue. For example, I have one with Norma. Hi, Norma. Her borrower that she sent me is approved for about 500,000, 525 or so. That's not really going to find a single family home here in the Bay Area, but condos, there's lots of condos out there in that price range. However, before we go look at that property, we have to know what's the approvability of that association. Is it FHA approved? Is it not? Is it conventional? Is it not? What do we have to do there? A lot of times, and there are many condos out there that are not FHA approved, or the FHA approval has expired. And that can be a downside. And towards the end of this call, I want to talk with you, especially listing agents, pay attention to this, because this is very important, especially from a lender perspective. When I go look at a condo listing, for example, for this particular borrower, I've pulled up a couple of listings. Before I'm even letting anyone know about it, I'm calling the listing agent and saying, because normally they don't put the information in the listing. So I have to call and say, is this property FHA approved? If I can't find it on the list, normally I can, but if I can't, or is it Fannie Mae approved? If I don't have the HOA name, may not be able to tell. If it's not FHA approved, that can be a big downside. So if you're a listing agent, you're going out to, or you already have a listing that's in a condo, or you're going for a listing appointment, please pay special attention to this, because this is really huge, especially going back to affordability here. The consequences of not having FHA condo approval is significant. So it could mean to a buyer that, well, I can't buy it. For example, this particular borrower that Norma and I have, she only can go FHA. Not going to get into why, but there's some qualification issues there, but definitely well qualified for FHA. But she only can buy an FHA approved condo. If it's not FHA approved, what's happened? You've limited your pool of buyers. What do you as a listing agent want when you go to your listing presentation? You want to let that seller know, if you list with me, I know how to get the biggest pool of buyers out there, which does what? It results in a higher purchase price, right? So the smaller group of buyers, you're not going to get as much. Bigger group of buyers, bigger competition, more offers, higher price. The impact on potential buyers can be significant. It could mean them not being able to buy a property versus, or renting for, another 5 or 6 years versus being able to enjoy the benefits of homeownership, the tax advantage, building generational wealth gap, things like that. If the property is not FHA approved already, then that could create uncertainty with the buyers. They could say, well, why not? If they know, okay, not everybody understands or knows the intricacies of condo approval process, but that's why we're having this call today, because it is very important. And even Diane, who is my colleague that's on this call, she and I have been talking a lot about condos this week, and we feel like there's an untapped space there in our market where lenders and maybe real estate agents alike think, oh, condos are more difficult, and they are. They're not easy. It takes a lot more work. You have to have a lot more knowledge about them, on how the financing works, what's an option, what's not. If you guys are into it, I think that it would be great for us to dig deeper into condo financing and for you to become a condo expert, because there's very, very few out there. I know that because I call listing agents all the time, and I'm always surprised that they're selling a product that they don't even have great detail about, right? You're selling something, you need to know how someone can buy it. And when I make calls, I would say 80% to 90% of the time, the agent has no idea what I'm talking about. It's kind of frustrating. For sellers, it can be a major challenge if their property is not already FHA approved. And I'll speak next about why I'm talking specifically about FHA approval right now versus Fannie Mae. If the condo complex / HOA homeowners association is not FHA approved and is expired, or maybe they never got it, it's not possible for a lender to obtain FHA approval. Okay, there's a lot that has to go into it, and it has to do with the HOA company going directly to FHA and working with them to get that approval back. It can definitely impact your seller's bottom line. Again, going back to the pool of buyers, you want the most that you can possibly get. What to do if the FHA approval is expired. Now, it's not anything that you're going to be able to do. It's not anything that I'm going to be able to do as a lender. this is something that the HOA company has to go directly to FHA with and apply. There are some organizations out there that would be the middleman between the HOA and FHA, but they do charge fees. So typically it's best you just work straight with them. Again, this is not for you and I to actually do, but this is for you to know. So when you're at the listing appointment, hopefully you've already called me to find out what the approvability is for this complex. And I've told you, it's FHA approved, you're good to go, or it's not, blah, blah, blah. You can present that to the seller and say, this is what we're going to need to do. We're going to need to do it now. Who is your contact at the HOA? Who can I call to talk with them about this? If you need help with that phone call, please loop me in. I'm happy to help facilitate that as much as I possibly can. So what does the FHA require? So the HOA is going to have to gather financial statements. So they're going to be looking for financial health of the HOA. Do you have significant reserves? Do you have the minimum required reserves? For example, if you've got a complex and in 3 buildings, the roof needs to be replaced, but there's not enough reserves to replace those roofs. Now you're putting a special assessment on the homeowner, and it can be significant, thousands and thousands of dollars. Is that homeowner going to be in, a financial hardship because of that? In a lot of cases, they can be, especially if you say, hey, you're paying $500 a month in HOA, but we've got, we're negative on our reserves. Now we have to increase the HOA dues to $750. And you've got to pay an additional $10,000 within the next 24 months because we've got to replace 2 roofs. Now, I'm not trying to scare you, but I'm just trying to, I want you guys to know exactly what is entailed in a condo project, especially if the FHA approval has expired. Insurance information, they're going to ask for the master insurance policy. That insurance coverage has to be 100% replacement cost, no questions. If it's not, then no loan can close in there with FHA, and also conventional. Conventional is going to require the same 100% replacement cost, just like we do with a single family home. So that part's not different. Master insurance can be shopped around by the HOA from time to time. So maybe what FHA has already and it's approved and they've already got the insurance, that insurance may have expired. Then we have to get new insurance because we're still going to look at that no matter what. If that insurance has expired or is about to expire, then we're going to need new insurance in place, and we're going to have to make sure that the HOA has proper coverage and is going to, not impact negatively the potential buyer. There are occupancy standards that FHA requires, same as conventional, but FHA is a little bit different. Basically, if you've got a complex and there's, say, 100 units, 25% or more cannot be investment property, for example. And a lot of people will buy a condo and they want to rent it out. You know how you have to get approval from the HOA. There's a reason for that. It's because if you go above that threshold, then that complex could lose their approvability status. So now less loans can be closed in there, less pool of buyers, property values may go down. If the condo is in litigation, that can be a challenge. Now, not all litigation is an issue, but the times I've seen a condo complex that has litigation ongoing, it is significant. I don't normally see anything that's minor. The percentage of delinquencies of the HOA dues is a big factor. As a matter of fact, my first loan that I closed here at Rocket, it was a condo, was not Fannie Mae approved already, and was not FHA approved. I'll talk later about how we were able to get that done. But we got the condo questionnaire back, which I'll show you later in the call what that looks like. And the developer had purchased a certain number of units within the threshold, but had not paid HOA dues for months on any of those units. So it was significant delinquencies. Well, why is that an issue? Well, if that person or entity that owns those units never pays, what's going to happen? Well, the reserves are down, right? Now special assessments are incurred, which could impact our, potential borrowers' financial stability, and we don't want that. So we had to have that person pay all of those HOA dues, bring them all current before we could close. And they did, because they knew they were going to have to do it anyway. So they just went ahead and did it, and we were successful. We were able to close the loan. But it was challenging because we didn't know for a couple of weeks what they were going to do, but they finally did. But just letting you know how important it is that we address these kind of things ahead of time. And I'll keep going back to, especially with you listing agents, please, when you go to a listing appointment, call me first. Let's talk about the property. Let's get all of this information out now so that you can avoid any potential pitfalls during the process of the closing. If once the HOA has all of this stuff together that FHA requires, they're going to submit it to FHA. FHA will then process everything, go back and forth with the HOA to gather any kind of missing documentation, or if the documentation provided is not sufficient, FHA will decline to approve the HOA, which is a problem, right? You need to know about that ahead of time, though. You don't want to be part of a transaction where you're helping someone get into a property and then they end up losing that property for, reasons beyond their control. All right. Now we've talked about FHA. Let's talk about Fannie Mae. So hopefully I didn't scare you too much with FHA. Again, if the property and FHA, I'll show you later that there's a website that you have access to go to. It's public record that you can go in and pull a property to see if it is, or a complex, I should say, to see if it's already FHA approved. You can do that on your own. Fannie Mae, unfortunately, you can't. Fannie Mae does not give public access to that. Google all you want, because I know I tried it. It is not possible for you or me, even as just a loan officer, to log into Fannie Mae's condo management system. So in the event that you're going to a listing appointment, or you've got a buyer and you pull that property and you don't see anything about it, give me a call. I do have ability to send a message to my condo team here at Rocket, who will then write me back and let me know that they're never going to say, yes, it's approved, go ahead, or, it's 100% done. They're not going to give full approval on it ever, but they will tell me if they see any red flags, like, oh no, Jody, that don't even bother, because that we already know that complex has, significant delinquency rates, or maybe deferred maintenance that could be a health and safety issue. You don't want to take your client to that property anyway. And if you're a listing agent, you probably don't want to take that listing, which I know can be difficult to say no to. But if you're not going to be able to sell it with a loan, it's going to be really, really difficult. Take it if you want to, but I'm just, trying to help you out. Okay, so FHA and Fannie Mae condo approval is starkly different. Okay, like I said, if it's FHA approved, probably going to be Fannie approved, because FHA is usually more strict. Shouldn't be an issue. If the Fannie Mae approval is not already in place, that is not a dead deal for me. I can still possibly lend there. If FHA approval is not in place, can't do it. And that's going to be true for all lenders, no matter Rocket or whoever, for FHA. So Fannie Mae, even if the condo has expired, still might be able to do the loan in there. Fannie is very focused on long-term homeownership sustainability. They're constantly adding condos, and they're taking some away, but those that are taken away should be taken away for various reasons. But they do have more flexible terms. Downside is rates are typically higher on a conventional loan / Fannie Mae loan versus FHA. They do tend to put quite a bit of an adjustment on there for a condo versus single family home. Depending on the approval status, Fannie Mae may ask for 10% down. Fannie Mae is typically 5% down, 3 to 5% down. But with condos, it's a little bit different. If we have to go through one of the types of approval that I'll talk about here in a minute, it can be 10% down. So that could put someone completely out of the market to be able to buy. And that would then mean that they have to go FHA, and that the project has to be FHA approved. Conventional is very sensitive to credit score. FHA is a little bit more relaxed. Well, in 2021, and if some of you that have been with me for a while know this, that the Champlain Towers that collapsed in Florida in 2021, that is what sparked the new guidelines that Fannie Mae put out a couple years ago. Oh God, three years ago now, to protect borrowers from being in a physically unsafe complex or financially unstable complex. Remember, we don't want to have someone have the dream of home ownership, and then, you know, the HOA goes downhill financially, and then they lose what they've got. So the deferred maintenance for, as a result of the Champlain Tower collapse and that Fannie Mae put in place, still in place. Deferred maintenance is not always a deal breaker, but it depends. Is it a health and safety issue? Then that's a problem. If they're, you know, HOA is in bad shape, then that could be a challenge as well. Fannie Mae typically in the past has expected the lender to certify the project, to say, hey, this project is warrantable, we're good to go, no problem. Thankfully, they took kind of the reins back and said, no, we're going to do this ourselves. And then we're going to publish this list that says, we already know about these complexes. We already know that everything's in good standing. It's good to go. If the project shows that it's ineligible, then the HOA can still work directly with Fannie to get that eligibility back. So it's not always a deal breaker, but depending on time frame, it is something that could take a while to do. Again, back to my listing agents. If you're listing a condo, please address this up front, because most don't. Types of approval. This is going to be for Fannie Mae. So there's 3 types of approval that we can work with. First is type A, then we've got type V, and then we've got type B. Type A, this is going to be the best one. So let's say we've got a condo complex that has not had approval before, or the approval's expired. We're going to send a questionnaire out to the HOA. Let me go ahead and show you what that looks like. This is what that looks like. So we send this out to the HOA. They have to fill this out, send it back to us, and this will help us determine if we can lend in this complex. Now, put a couple arrows here because these are the 2 that I see the most as being a challenge. So the HOA basically fills this out. They charge the buyer for this. I've seen anything from $125 to $500 that the HOA charges. Now, it's usually the management company that the HOA has hired charges this for this to get this document complete. I wish they didn't charge it because I think it's silly. This does not take that long to do, and they probably already have it done, and they're just changing some of the information. But regardless, that's what they charge, and it's typical. Buyer has to pay for it. Lender's not allowed. And this is the questionnaire. 3 pages. The 2 pieces of this that I see challenges are going to be where I put the arrow, number 14. Please indicate the highest number of units owned by a single entity. Now, this is a bigger deal on newer condos when maybe the developer still owns some condos, or maybe they purchased several units. The one I was telling you about in January. I never got the full reason on why, but the developer bought 11 of the 30 units in that complex. I was told they had to. Don't know why, but they did. That's the same developer that then did not pay the HOA dues on the complex, I'm sorry, on the units, and then that was a problem. The section here, number 31, is talking about oh, I'm sorry, that arrow went in the wrong place. Sorry about that. It should be right there, number 32, about deferred maintenance. So if something, for example, like the front gate, and I did have this last year, the front gate was in disrepair, deferred maintenance was not going to be repaired by closing. We still did the loan in there because that was not a health and safety issue at all. Now, if there's issues with the balconies, cracking, and nobody can go on balconies, that's a health and safety issue, cannot lend on it. Just giving you an example. Okay, let's see. Doing okay on time. Okay, so type A. So you call me, we've got this condo, not FHA approved, can't go FHA. It's the approval for Fannie Mae expired. Here's what we're going to do. We're going to get that questionnaire filled out, see what the answers are. Some of the minimum requirements for type A eligibility is the control of the HOA has to have been turned over to the unit owners, not the builder/developer. The project has to be 100% complete. So if there's a project with 4 phases, all 4 phases have to be complete for Fannie Mae to warrant that complex. 80% of the units have to be sold and closed if the developer share is no more than 20%. Otherwise, 90% of the units need to be sold and closed to unit owners. Freddie Mac, little caveat there, allows this at 75%. Now, are you or your borrower going to know if they're Freddie or Fannie? No, not really. It doesn't. That's something I'm going to look at. So if I get that questionnaire back and I see that maybe we're at 80%, then I'm going to flip this to a Freddie Mac loan and we're going to get it closed. Nothing you need to worry about, but just letting you know. For type A eligibility, that's good for owner occupied, second home, and investment. Remember, FHA doesn't allow investment or second home. We always want to go type A if we can. If we can't, then type B. Blah, it's the full review. Typically, it's going to be really challenging to get this done, but it is something that I'm happy to do for you guys and see if we can make it work. I'm not going to read through this whole thing, but it is something where, for example, we've got to get the budget. The HOA budget has to go to Fannie Mae for approval. We have to make sure that all of the insurance requirements met. Occupancy is a huge issue there. The questionnaire is going to be key, and the budget are going to be key to that, this type B being approved. It does take a little bit longer time, so this is not something that if you bring me a contract today, we could get full approval on. It would take time. So again, go back to my listing agents. Let's tackle this ahead of time. I can't say that enough. Type V is another type of review process that we will do here at Rocket. This is going to be for your detached condos. Believe it or not, there are detached condos out there. If it's a project that's 4 or less in the unit number, we see that quite a bit in San Francisco, where you'll have a duplex that has been turned into a condo. So if I've got a loan that's already a Fannie Mae loan and I'm doing a refinance Fannie to Fannie, then typically doesn't matter much about the HOA, that person already owns the property. So we can do this with reduced documentation if the approval has expired. Type V does not require the questionnaire, which is great because that questionnaire can really be a problem. But again, you know, as a lender, if I know ahead of time, if we get an appraisal in and there's some challenges there with the property condition, you know, we're still going to make sure that we're doing the right thing by the borrower. We're going to make sure that all the insurance requirements met, including flood insurance if that's required. Fannie to Fannie or Freddie to Freddie refinances would potentially qualify for type V review. Already talked about the condo questionnaire, but there it is. If you guys want to take a quick look at that, there's about 36 questions. Pretty easy to get completed, as long as you pay them the money they want. Now, call to action. What are we going to do with all of this information that we've learned today? I'm hoping that listing agents, if you've been listening, you guys are going to take this to heart with letting me know or letting whoever it is you work with already. If it's not me, I would love and be honored if you would give me an opportunity to work with you to tackle this stuff up front before you put that property on the market. In addition, when you sit with that seller to give your listing presentation, you can pretty much count on a lot of the other agents that have shown up are not asking some of these questions because they're hard questions and maybe questions the seller doesn't know the answer to. But you're going to be positioned as more of an expert, and they're going to have more trust in you with you knowing these things versus the other people that have shown up that are really just saying, hey, I'm going to get this price for you and it's going to be no problem. Let's sell it real quick. That may not happen, and it's best to be upfront and honest going into it. I am happy to help you with any information that you need ahead of your listing appointment. Like I said before, you want a larger pool of buyers as you're presenting to the seller. I think that we can get this price, but we could get more. Let's look at this Fannie Mae approval or FHA approval. Let's find out what the complex already has in place. What can we do to help increase that pool of buyers that would then result in a higher purchase price? If you'll go with me here to this FHA condo lookup tool, this is what I was telling you about earlier that's public. So you've got access to this as well. There's no login required. So I'm going to click on it here. I look at the same thing that you're going to be looking at. Where's all this? Sorry, there's a bunch of stuff you guys probably don't care about there. Okay. All right. So here is the FHA condo lookup tool. So let's look for Midtown at Hayward. That is
Jodie,
a condo that I.
The slide on the
Oh, it is. Oh, my apologies. Hold on. Let's see. Thank you for letting me know. Let me go back in here. Ah, new share. Okay. Okay. Let me know when you can see that. Can you see it?
Perfect. Yes.
Yeah, you can see the, okay, perfect. Okay. So this is what I look at and what you can look at as well. Google FHA condo lookup tool and you'll get the link. It'll should show right up. So we're going to look at Midtown at Hayward. That was one of the condos that I looked at this week for Norma, for our mutual client there. Unfortunately, it's not FHA approved, so we can't proceed with that. But what I'm going to do is I'm going to put, let's go state, and I'm going to put California. And let's see. Let's see if that works. We'll just pull them all up. Boom, here we go. Now this is going to be the list. So for all the condos in the state of California that have either current approval or in the past, maybe the approval expired, maybe the project became ineligible, it's going to be listed here. Now you would think that it would be in alphabetical order, but it's not. So my suggestion is to search by name if you already know the complex. So let's go back and I want you to see though what it looks like. So before I go back, let's say here we have Magnolia Manor condo in Valley Village, California. Does it have condo approval? Nope, it sure doesn't. It's expired here. It looks like it was withdrawn. Why? Not sure. We could see what the comments say. Project ID was created in error. Okay, well, there you go. Now we know why. So let's look at, let me just scroll down and randomly select. Let's do Heather Green condos. Oh, it looks like it was previously approved. Get this little box out of the way here. Let me go back. Heather Green. Okay, right here. All right. Approved, but it expired. When did it expire? 2010. Look at this. Expired 2011, 2010, 2011, 2014. You know, these are complexes that do not have current approval. These are complexes that there's going to be a less pool of buyers for. So these are condos that you know that if you've got an FHA only buyer, that don't even go to it, right? So let's look up, condo name is Midtown at Hayward. Let's see what we get here. All right, so this was the complex Midtown at Hayward, and you can see that it expired in March of 2023. Now, I fortunately was able to speak with a listing agent on a unit that was in there in that complex, and they have the HOA went ahead and submitted for approval here this week. It's going to take a couple of months that I was told before that FHA approval is reissued, as long as everything looks good. So it could be a couple of months before maybe Norma, our mutual client, could look at that property. But this is something that if you were a listing agent and you've got a potential to list 1318 B Street in Hayward, you're going to go here and you're going to say, oh man, it's already expired. I'm going to go ahead and talk with the seller about this during my appointment and tell them, I know that this has expired. Let me talk with the HOA. Well, they're not going to let or not let you. I mean, you can talk with the HOA if you want. I talk to the HOA myself. You can say, I've already spoken with the HOA and they are willing to reissue the FHA approval. It's going to take X amount of time. In the meantime, let's do this, 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 and this. You're just going to present yourself as an expert. And like I said, and I know this just based on all the calls I make, especially with condos, a lot of listing agents do not have the information that they need to successfully sell that property at the highest price for their client. So you've got this. Again, Fannie Mae is not public. It's not even for me to log into. So if you've got, for example, this particular property, you call me, Jody, it's not FHA approved, but will you check Fannie Mae status? Yes. So I go check Fannie Mae. If I come back and say it's Fannie Mae approved, this one's going to be 10% down. At least you can go into it. You can put that in your listing. Not FHA approved, Fannie Mae approved, whatever, if you want to. Now, at the same time, I know listing agents may not want to put that in there because you want people to call you to get buyers. Totally respect that. you do you, whatever you want to do, it's your thing. I'm just trying to give you as much information as I can to help you be more informed. Okay, so I believe that is it. We're still within time, got enough time for Q&A if we've got any questions. I'm definitely interested in that in San Diego. Many of my friends will end up buying condos. Yes, Elena, agree. We can do some work on this if you'd like to be the condo expert there. It's definitely needed. Okay, I don't see any other questions. Mike, do you want to take it back over?
Sure. Let's see. Any questions? Nobody is confused by condos?
No? We all know the drill. Well, hopefully you've left here a little bit more informed than when you dialed in just at an hour ago. If you guys have any questions, need anything, don't hesitate to call me. If you've got the buyers, remember I've got the purchase special and the incredible rate discounts right now. So let me know.
Let me ask, a planned unit development.
Yeah, PUD. So that's going to be more like your townhouse. So a townhouse can be, of course, they're usually share walls. Maybe there are a couple of levels. It's going to be, because townhouse is not really a legal definition in California, right? So what we look at, what we call that in the lending world is an attached PUD, an attached planned unit development. And it will have an HOA. It can still look like a townhouse, smell like a townhouse, feel like a townhouse, and be deeded as a condo. So you still have to check that property type. Don't go just off visual.
My question is that the rules for condos, do they apply to PUDs?
No. Nope, there's no HOA approvable or approvability that we have to look at with attached PUDs. They're look just like single family homes. There could be a pricing increase depending conventional versus FHA, but usually with PUDs anything goes.
Okay.
Because you own that with a PUD, you're going to own, down to the center of the earth all the way up to the sky. You own that property. So if your roof is in need of repair, you've got to pay to fix it.
Right.
Yeah.
Yeah. Okay. Any other questions? This is an audience participation opportunity.
No, but that was really helpful. Thank you, Jodie.
Thank you, Alina.
All right. Well, thank you very much. So we've answered the condo conundrum. If you have any questions about a particular one, reach out to Jodie, particularly if you need to get a loan. And we'll see you guys next week then.
Bye, everyone. Have a great day. Call
Thank
me.
you.
Bye.